Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 287 of our YouTube channel and podcast, and I could not be more excited to continue sharing with you guys personal finance topics that I think could be useful for you in your long-term financial journey. Today, we are going to be talking about Gen Z and the impact that Gen Z is having on our financial system and ultimately the financial decisions that Gen Z is making, and then whether or not those financial decisions are going to prove to be beneficial over a long period of time. Because young people need to understand finance and need to understand how to deal with their own personal finances. And that's something that I pride myself on helping you do day in and day out. And if I'm going to do this effectively, I need to understand what this newest cohort of adults, these Gen Zers, exactly what they're doing with their money. And I think we all need to better understand whether or not those moves are actually right and whether or not we should be following along or jumping off of the bandwagon with the Gen Zers. So stick around for all that and more in today's episode. Before we get started, though, if you could go down below, hit the big red subscribe button, smash that like button, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you're interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single one of you who is watching or listening to the show on a day-to-day basis. So every generation is different, and they are extremely different when it comes to how they handle their money. Right. And they're extremely different with how they know about handling their money. Right. The Gen Z generation, which is what we're going to be talking about today, they've grown up on social media. They've grown up, having access to a lot of technology. They've grown up with a booming stock market for most of the time that they've been even close to adulthood. Right? They've grown up through these things. The millennials kind of came into their own around the time that technology was starting to hit, and they've seen the technological advancements that have occurred. But Gen Z has had a little more exposure to technology over time, and so millennials, even though they are very technologically savvy themselves, they also have this old school in them, a little bit of old school that they got from their Gen X or baby boomer parents. Right. And these Gen Xers and baby boomers, they, now are in their 40s, 50s, 60s, 70s, and they lived a very different life than do the millennials, than do the Gen Zers today. And the way that they all handled their money is very, very different. Right. The reliance now on technology and financial technology, the difference between using advisors and not using advisors, investing in, boring things like bonds and CDs back for the baby boomers, and then moving into mutual funds and like ETFs for millennials. And then, the Gen Zers really jumping into the whole meme stock craze and Bitcoin and Ethereum and all these different things. Right. You see a bunch of different ways in which these different generations invest their money, in the ways that they deal with their money and how they think about money. And a lot of how they think about money does just have to do with age, right? Because we all mature into thinking about money in different ways, because some things don't ever change. Some things are always going to be the same and are always going to be needed when it comes to your personal finances. And those are the things that I try to teach you on a day in, day out basis. I'm trying to teach you those fundamental things that are going to hold over a long period of time, that aren't going to just be fads, that aren't going to just be things that are here today and gone tomorrow. I want you to be able to, keep up with these fundamentals. I don't want you to have to change the way that you're laying the foundation for your financial life. And the same goes with how I think about Gen Z. Even though Gen Z thinks, or many of them think, that they are not that they are the best thing since sliced bread, but they have the way to do it. They've cracked the code. Things won't be like their boomer grandparents had it. No, these Gen Zers need to understand foundational finance, and they need to understand whether or not they're doing things in the correct way. But first, before we can see if they understand that or not, we have to know exactly what they're doing, how literate they are financially, what they are doing with their money, and we can get a little better idea. Now, Gen Z, they were born after 1995. So I was born in 1995 on the last year of the millennials. Some say 96 was the last year for the millennials, regardless, right? But Gen Z was that next year. So my younger brother is a Gen Z kid, right? And this was the first generation to grow up with computers, smartphones, and the internet basically the whole time. Millennials have remained in the spotlight for some time, but with the oldest of Gen Z now reaching college age, paying attention to them, how they think about money and their financial literacy is a crucial step for banks wishing to make connections with Gen Z later in life, right? People want to understand what younger people are doing with their money so they can adapt, right? Especially these financial institutions. The recession, the housing bubble burst, and seeing millennials struggle with college and other financial debt continue to influence Gen Z's financial literacy and habits. As a result, a study by Radin found that 2/3 of a group of 2,500 teens had already opened a bank account and were as much as 3 times more likely to have taken a financial education class than millennials. But while they may be more financially savvy than millennials, many also face stress related to college savings, getting a job, renting an apartment, buying a home, and paying off debt after college, right? Gen Zs and millennials, they do have a lot of the same problems, but the Gen Zers saw a lot of the things the millennials did and said, I don't want to have to deal with that, right? College loans being one of those things. Hey, I don't want to be deeply in debt when it comes to college. Now, many of them still are, right? But many of them said, I don't want to have to deal with that. I don't want to have to deal with that issue. Many of them also looked and said, hey, you can make a lot of money by investing your money. And so they're very interested in doing that as well. But I want to focus on 4 major points about Gen Z financial literacy and habits. I want to focus on their money management skills, what they think about debt, how they think about managing money in a way where you're managing your own money and not, allowing somebody else to help you or do it for you. And then we were also going to talk about what it would look like to create a Gen Z financial literacy program. So let's just start with their money management skills. Most Gen Z individuals are concerned about financial literacy, but at the same time, 84% rely on parents or family for financial information. Now, this is not surprising. Gen Z is still quite young, right? With the oldest of them being maybe 25 years old. Okay, so that's just a year younger than what I am, right? But with these Gen Zers being so young, of course they're going to rely on family and people that they know and friends for their information, because that's where a lot of information comes from, right? And a lot of them still rely on parents and family and friends for money in the first place, right? People in their early 20s, late teens, they tend to be quite reliant on their parents for money. Right or wrong, that tends to be the case. Okay. Now, this is challenging considering that many parents grew up with different financial information, less sophisticated options related to savings, retirement, mortgage, and loans, and often don't fully understand the options themselves. Okay. Now, this is a big thing that Gen Z is really the first generation that's having to walk through all the way in their financial life. And that is just the swath of options that there are out there, right? The number of options that they have for something as simple as opening a bank account is amazing, right? And then not to mention opening investment accounts, not to mention, budgeting apps and, where you can go to get a loan, where you can go to take out a mortgage. What can you do is the big question. And the answer is you can do a myriad of things. And so that can make it very confusing, especially for the analytical individual who is in Gen Z. They're trying to make the best decision, but it's hard to evaluate every single option that they have. They have a ton of options when it comes to their finances. Now, with recent shifts towards self-service, automation, and always-on availability of apps and digital banking, including pre-approval for mortgages and loans, situations have changed dramatically even since 10 years ago. At the same time, many banks and companies no longer offer the in-depth support of pension professionals, investing for the benefit of retirement and 401k, meaning that Gen Z individuals will have to make more financial decisions than their parents ever did, right? Gen Zs are going to be far more self-reliant in their finances than their parents ever had to be. And this is simply because nobody is there to help. Nobody is there to, pat them on the back. Nobody is there to encourage them. And in many cases, nobody is there to honestly educate them. Okay. Now, obviously you've got YouTube and, podcasts, and that's what I'm here for on a day-to-day basis. I'm here to honestly educate you. But the problem is that, for the average individual who may just, go to work and listen to, whoever is supplying the 401k and listen to what they say or whatever, or just do what their parents do, they're going to miss out on a lot of financial education that was, potentially going to help them, right? But they have to make a lot of these decisions themselves. These companies are not making the decision to just put money into a pension for them anymore. Okay, what's happening now is that you have the choice. You have to make the decision. They are relying on you to do the right thing with your money. And ultimately, a lot of individuals are not going to do the right thing with their money. But in order to do so, you have to have some understanding of what's going on. And I think a lot of Gen Zers are actually trying. They're trying to understand what's going on. They're trying to understand what is most valuable to them financially and otherwise. And we really haven't seen where this is going to go for them yet because they're still quite young. But it's going to be interesting given the number of decisions that they have to make. And individuals like myself, like I said, I'm of the youngest millennials, okay? And we have a ton of decisions that we have to make as well, okay? Because we just don't have the benefits that were offered previously to parents and grandparents. Now, basic financial literacy programs relating to money management, investing, mortgages, and renting or managing money will give Gen Z a better foundation for making crucial financial decisions on their own. And this is very true, right? Having good financial literacy programs, having good information that can help these, Gen Zs and, young millennials that tend to be in my age range to make good decisions is going to be vital. Okay, because it's hard to swim through all the minutia. It's hard to have all of the correct information. It's very easy. It's very easy to just, get on YouTube or get on TikTok or whatever and listen to what these so-called experts are saying and just go with that. I'll just, do what they're saying and really get run over by not understanding what they're saying or doing things that aren't best for you over the long term anyway. Okay, so we have to understand what's best for us and we have to get the education. And Gen Zs are at the precipice of that, right? They're coming of age. They're coming to this point in life where they're leaving their parents' homes. They're moving out. They're living on their own. They're getting their first jobs. They're graduating college, all these different things, right? Well, along with that, they need to get some financial education. That is 100% true. Now, how do Gen Zs think about debt, right? Many Gen Z individuals grew up witnessing millennials with student loans and debt, which has influenced Gen Z financial habits. Gen Z individuals are often extremely hesitant to take on any debt at all. While this is positive in a way because too much debt is often a bad financial decision, Gen Z also, they have this need to build credit, right? These are young individuals who are trying to build credit. Now, we've talked about how we'll do that, and I can rehash that here in a moment, right? And so this is not a matter of they need to take on debt, but this is just a matter of, if you don't have a credit card or don't know how to use a credit card to build up your credit score, you can't do that effectively. It's going to be far more difficult for you to do things like take out a mortgage, right? A credit score is going to be necessary to do something like that, okay? So in order to make some of those larger financial decisions and do some of those bigger financial things, they need to understand some of the smaller financial things that may be necessary to get them along. Now, if Gen Z or anybody else for that matter wants to be financially successful, something that's going to have to happen is they're going to have to understand that debt is not going to get them where they want to be. Ultimately, debt is going to be a hindrance to their ability to get to long-term financial freedom. It's what I teach you guys all the time. It's why it's in the financial action plan to get out of all consumer debt. Because if you're going to get into debt, it's going to continue to be a strain on your cash flow. It's going to keep you from having money left over. It's going to keep you from having money to spend on the things that you want to spend on, or have money in order to invest for your future, or have money to be generous with. You're not going to have money to do all those things. Therefore, you have to stay out of debt. Now, it's good that they have this honest fear of debt, and hopefully it bears out in the data that they don't take out as much debt. Okay, because that would be good overall for the Gen Z generation. But as they come of age, as they take out more car loans, as they take out more mortgages, as they have to use credit cards or choose to use credit cards, not have to, choose to use credit cards for XYZ and get into credit card debt, or as they do any number of things that can keep them from reaching long-term financial freedom, it is going to continue to be a situation in the United States where individuals are crippled by debt. And I hope this isn't the case. I hope that generations are learning from the ones before them, because millennials have historically been crippled with debt. And that's been the big thing, right? That millennials have struggled with money, have struggled with debt specifically because of student loans. And if Gen Z is not taking out as much in the way of student loans and other debt, then fantastic. Okay, but that has to bear out or else they are going to be behind the financial 8 ball as well. Now, engaging with financial education on debt and on having some savings and having some investments and having proper credit and things like that, those are things that Gen Z is going to have to learn. Right? It is an educational game, especially in your early 20s or your late teens. If you can learn some of these financial foundations when you are of that age, then ultimately you can make really good financial decisions for a long period of time. But if you don't learn things like this until you're in your 30s or 40s, it's going to be far more difficult for you to catch up ultimately. Okay? Now, one study by TransUnion showed that 46 to 56% of high school age students don't understand what is factored into a credit report or credit history. For example, many believe that bill paying, such as paying a phone bill, is factored in when it isn't, right? We need to better teach our young people. Now, not just about credit, okay, but about the impact that debt has, about the impact of and the potential dangers of having a credit card and having the ability to spend that much money on whatever you want, right? But ultimately, you got to repay it, and it has high interest rates and all these different types of things. We have to teach our kids this. We have to teach Gen Z this. We have to pass down this knowledge, because without passing down this knowledge, ultimately, the generations are going to just continue doing what they've been doing. And generations don't just continue doing, it gets worse. Right? Just think back to, the baby boomers, or maybe even a little before that, and how those individuals were buying their houses, their first houses, in cash. Right? Now, I know a house cost $9,000 back then, a single family home. Like, I'm not naive to the fact that, houses cost way more now. I'm not naive to that fact. But what I do know is that those individuals would have never thought to take out a mortgage. Taking out a mortgage for a home was looked down upon back then. Okay. Now, I'm not saying mortgages are bad things. Now, I'm just saying debt was not a part of what they did. They were not deeply indebted individuals. They had maybe some minor debts ultimately if individuals did take out mortgages or something like that, but they were paying for things in cash. But then once debt started to take a hold and everything could be on payments, everything could be, 24 easy payments of, $19.99 or whatever. Then we got into this cultural situation where more and more debt was more available, and more individuals were like, hey, it's just another payment. And if I can make the payment, then I'm going to buy it. Right. And hopefully, Gen Z can help us to dig out of that particular way of thinking, because that is one that is extremely dangerous. And so we need Gen Z to understand that debt is bad, and understand that debt can keep you from your long-term financial goals. Then Generation Z are digital individuals who grew up with apps and calculators for almost everything. While a certain level of awareness and self-sufficiency is good in many ways, it's important to seek out personalized assistance. Okay, these apps are great. There's some great apps out there. I can't lie. There are some great financial apps out there, whether it's budgeting apps or investing apps or whatever, right? Or time value of money, figuring out how much, money you're going to have in your investments in the future type apps, right? There are some financial apps that really just knock it out of the ballpark. But some financial apps, they, lead you into doing things that maybe you shouldn't be doing. Okay. Now, I'm not going to, call it by name, or you know what, I will, but it's not a vendetta against them, because I do like their app, but it can, actually lead you to do some things that you wouldn't otherwise do, maybe with some other more traditional apps. So if you just think about Robinhood, okay? Robinhood, I think, has a great user interface. It allows you to do a lot of things. There's a lot of education there, right? They make it very easy. But ease of use can also be problematic, because the easier something is to use, the easier it is to do stupid stuff. Okay. And some Gen Z individuals have been doing some stupid stuff via Robinhood, right? They've been using it more as a gambling site than they have a place to actually go and invest for the long term. Now, maybe that's the whole point, and maybe that's the way that they can get their feet wet in investing. But ultimately, something an app like this does is it gives such ease of access, such ease of doing things by yourself, right, that you can make a lot of foolish decisions. Okay, so having some personalized assistance, having some understanding about what you're doing before you actually go about trying to do it is extremely valuable. Now, I'm not saying that all individuals need financial advisors. It's not what I'm saying. I'm not saying that all individuals need financial coaching like I offer. I'm not saying all individuals need it. Okay, but if you have some misunderstanding, if you have questions, if you're in a place where there's a lot of ambiguity in your financial life and things are getting more difficult to understand, then maybe this is what you need. Maybe you do need to talk about things in your financial life. Maybe you need to talk about what loans are. Maybe you need to talk about how bank accounts work, and maybe you need to talk about options and investing and shares of stock and bonds and mutual funds and ETFs. Maybe you need to talk about all these things and understand them at a more granular level. And then once you do, then maybe managing your money yourself is a perfectly fine idea. Okay, but until you understand those things, don't just jump headlong into them. Okay, that's what I hope to communicate to Gen Z, is that you jumping headlong into things that you do not understand is going to hurt you more than help you. Okay, and the millennials, they can vouch for this 100%. Right? Why did people start taking out student loans? Because it sounded like it was a good idea. There was ease of access, right? Don't they just, you fill out an application and they offer you tons of money, and it's just like one click. It's like, yes, and you can accept however much they're offering you in loans. It's super easy to take out student loans. And a lot of people didn't understand that student loans are not bankruptable. And they didn't understand that those things are going to stick with you for a long, long time. And they didn't understand that they wouldn't get jobs possibly that would, give them the ability to pay off those student loans in a reasonable amount of time. Okay. So the financial system is going to take every advantage they can to get your money. Okay. And not just in a predatory way, but in a way that, hey, if we offer it, let's make it easy and let's offer it as easily as possible. And people will come. People will spend money. People absolutely will. And I don't want Gen Z to be at the funny end of that particular set of schemes and scams that the financial system can run over time. I want Gen Z to be very skeptical of the financial system. I want them to ask a lot of questions. Okay, I want you to be trusting ultimately of things that you do understand and things that are historically time proven. But I want you to question very, very heavily the things that are occurring in fintech, the things that are occurring with a lot of these new investment sites and banking sites and all these different types of things. Do your research before you ever do anything, right? I was talking to somebody recently who was talking about trading options on Robinhood, and I'm like, can you tell me what an option is? Can you tell me what an option does? Can you explain to me what your outcome is here? And ultimately what their outcome was to just make money. Right? They're just trying to make money as quickly as possible. And again, maybe this is a good thing that people can get in and make their mistakes and understand early. But if you can skip some of those mistakes and make good decisions right from the get-go, right, then you will be able to get in a position that other people can't ultimately be in financially, because they did make those mistakes, because they have spent a long time just dragging through the mud. If you can just take a few more seconds and learn a little bit more, then you can be a lot better off over a long period of time. And ultimately, you can manage your money yourself. You can do that, but you have to be very, very thoughtful about how you do so. Okay? It will help Gen Z to better differentiate between when self-service is the best option and when it isn't. Okay? Because sometimes self-service is perfectly fine, right? I don't think many people need help with opening bank accounts. I don't think that's a big problem. Okay? Yeah, you need to understand what's going on there, but don't need a whole lot of help. Okay? I don't think a lot of people need help when it comes to, just doing some very, very basic financial things. Budgeting, right? Some people can do, a lot of people can do budgeting by themselves. Okay? They can do it with themselves or with themselves and their spouse, whatever, right? They can get that type of thing done. But when it comes to your investing life, right? And when it comes to, okay, I've got this Roth IRA and I've got this option of having a 401k with a match, or, I've got these different accounts and I need to move them to this different place, or, somebody left me this investment account and I need to move it to a certain place or whatever, right? It gets very tricky. There's a lot of rules, and there are a lot of individuals who they are 100% professionals in doing this and being good money managers, and will help you to manage your money and to where you do have somebody on your side and can actually help you. Now, I'm very skeptical of financial advisors too, and their willingness to sell you things that they themselves may not understand, and they're just trying to make a commission sometimes. I can appreciate that as well. I understand that can be the case, but you also will need to vet and do your due diligence on your financial advisors. You need to make sure that somebody is working for you, and you're going to get the absolute best that you can get out of the relationship, okay? And investing is a place that this may need to be done. Taking out a mortgage is a place that this may need to be done, right? You may need help in your financial life, and it's totally okay if you decide that you need it and that you seek it out. But you just have to be honest with yourself, and you have to be very, very questioning, skeptical, inquisitive, curious, however you want to say it, right? You need to ask a lot of questions, and you need to be critical of what people may suggest, and then make all the decisions on your own. Don't allow people to make decisions for you, because ultimately people aren't going to make decisions in your best interest 100% of the time, but you can absolutely make decisions in your best interest, okay? So managing money yourself is not a bad thing. I do just about everything myself, right? But that does not mean that everybody should. And that does not mean that the average individual should or will be able to in a proper way, okay? You have to have the education, you have to have the understanding, and it will help a ton, okay? So that's what I think about managing your money by yourself, especially for Gen Z. Now, Gen Z spans a wide gap, ranging from students who are just entering college to those who are just over 10 years old. Okay, individuals at every age require different levels of help and support, but connecting early and preferably in high school or sooner is ideal for building the financial literacy and knowledge to aid Gen Z's financial habits and to help make good decisions once they become financially independent. Okay, we need to get Gen Z as early as possible on the right track. Okay, now I'm not saying that some of them aren't on the right track. I'm just saying we need to push them away from meme stocks. We need to push them away from the thought of cryptocurrency being the only way to invest. Okay, we need to push them towards things like budgeting, like staying out of debt, like having emergency savings, like investing in mutual funds or even individual stocks. If you want to invest in individual stocks, teach them how to do it. Teach them how to understand what's going on in the stock market, what the stock market is, how it works, what's going on, how you can build your money over a long period of time. I never took a class that taught me that in high school. I never took a class before high school that taught me that. It took until college to actually know what was going on in my financial life, right? And then once I figured that out, I looked up and I go, oh, I've got these student loans. I need to get these student loans out of my life. Okay. Oh, I need to start investing for myself. Let's begin doing this, right? And you absolutely can. If you're, out of college or in college or whatever, and you're just now, coming across this podcast or trying to learn about your finances, that's a perfect time. That's perfectly fine. But think about if you would have learned earlier. Think about if you would have known about the growth of money, the time value of money earlier. Think about if you would have known how deadly and how just very bad debt is earlier on in your financial life. Then you could have made much better financial decisions that would benefit you a lot more over a long period of time. Okay, so of course, we want Gen Z to know how to budget and how to track their expenses. You want them to know about debt. You want them to know about saving and planning for college. You want them to know about getting a job and managing your income and taxes. You want them to know about renting and buying and mortgages, right? You want them to know about investing vehicles and other large purchases. You want them to know about paying bills on time, how to pay bills, how to transfer money, how to do these types of things, right? Financial literacy is important. And for our youngest generation of individuals who are beginning to manage their money on their own, right, it is vital that we try to pass good financial information along to them. And if you are Gen Z, it is vital that you seek out said information. It is vital that you spend your time trying to learn good information. Do it now, and then later on, you can coast a lot more. You can make a lot of, just easy financial decisions saying, oh, okay, this isn't that hard. I've learned about this before. I know about this. And you can jump into your working life being able to do all of the correct things just right off the bat, right? There are a bunch of people who say, oh, I learned from the mistakes of my 20s. I learned from the mistakes that I made early on in my financial life, and it made me better ultimately, right? And that's all fine and good. I'm perfectly with that. But I am more of the thought process of if you just don't make the decisions, if you learn from other people's mistakes and don't go and make those mistakes yourselves, if you learn from those mistakes earlier on, right, and don't make those mistakes in your own life, then you'll actually be better off than the individual who made those mistakes in their 20s, right, or in their 30s, or whenever they made those mistakes in their own financial life, right? And then you can move on in becoming better than they were. You don't have to wait. You don't have to just have this sense of, okay, it took them until they were 20-something. It's going to take me until I'm 20-something to get it right. Get it right early, and you will be better off for it. And Gen Z, I hope and I pray that you can get a hold of good financial information like what I'm putting out for you every day here as early as possible and really latch onto it. You will be better off for it, I promise. So thanks for watching this video. If you could go down below, hit the big red subscribe button, smash the like button for me. Leave a comment down below and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and pushing you towards long-term financial freedom, which is what I hope for every single individual watching or listening to this show on a day-to-day basis. So tune in tomorrow as I continue talking about personal finance topics that I think could be useful for you in your long-term financial journey. So thanks for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.